G'day folks, welcome back to another update. Today we're looking at Bitcoin, and it's gravitated back to the resistance levels we drew some time ago. Before we go any further, make sure you hit that like and subscribe button to support the channel. First, looking at the outlook. As of today, January 24th, 2025, Bitcoin is trading approximately $102,000. The recent surge past 100,000 is attributed to increased institutional adoption and the anticipation of more crypto-friendly US administration under President Donald Trump. Notably, BlackRock CEO Larry Fink envisions Bitcoin reaching 700,000 as institutional investments grow. Additionally, Senator Cynthia Lummis's proposals for a US strategic Bitcoin reserve could further bolster demand. However, some investors remain cautious, citing concerns over regulatory clarity and Bitcoin's intrinsic value. Overall, the outlook for Bitcoin in 2025 remains optimistic, driven by favorable regulatory developments and heightened institutional interest. So first we look at the longer-term trends, and we always look at the monthly, the weekly, and the daily. So on the monthly, we've got the CCI broken above the moving averages. This is a CCI 150. Likewise, the price is above its respective moving averages. And for those new to the channel, these moving averages can be found in the description below for that video for reference. Excuse me. On the weekly, so bullish on the monthly. On the weekly, it's still bullish on the price, but notice it's pulled back within that moving average range on the weekly CCI. Now, that's because of this bearish divergence. If I zoom into this one, you'll see here we had lower highs on the CCI versus higher highs on the price, and we anticipated reaching this minimum retrace level. It's actually hit that level and bounced out of it, and currently it's just bouncing along the top there. And that target range is measured by the Fibonacci retracement back to that significant low. That's a 38% level of a retrace. Sometimes it can fall a lot further, other times it just bounces off it like it did here. This is the minimum, and more than 90% of the time it hits this minimum retrace on any time frame. So just be aware of that. That's on the weekly. So somewhat neutral positioning on the weekly. On the daily, you can see there it's hit this resistance back at 108,263. It's actually bouncing just below that resistance after hitting this. We've got another divergence here, and again, this is on the daily. The divergence on different time frames are independent. They're not always aligned. In this case, they are aligned. So again, there was a bearish divergence here, price dropped, and then it bounced out of that. But at the moment, you'll notice the CCI broke up slightly, and so did the price above the respective moving averages. But at the moment, the CCI is in that moving average range, giving us a neutral positioning on the daily as well. Now, to look at the intraday charts, we always look at the intraday in reference to the daily. So again, cautiously, I wouldn't be going long or short until we see a more conclusive break above or below that moving average range on the CCI on the daily. But at the moment, for example, back here when it broke above on the daily, that was the 17th of January, you would have gone back here to about the 17th. At that point, you could have got in early there. That was when it broke into that moving average range there, but it would have been a bit premature. But the way you trade this is around the 17th there on that one, you would have got in there. Both the CCI and the moving averages on the price have been breached to the upside, and you close it out when in this case, when the moving average is breached on the CCI, and you would have got out there. So that would have been a nice little gain. So if I just drill in to that one there, draw so you would have got out at the close of that hour. This is on the hourly chart, and you would have got out when the CCI breaks into that moving average range. So you would have got out on the close of that. That was just under a 3% gain in 20 hours of trade. And because the daily was bullish, you would not have gone short here. And by the way, you'll notice here there's a bearish divergence, or there was. That's slightly about a double top almost, or a slightly higher high on the price versus the same period. You've got a lower high on the CCI. That's a bearish divergence. And what it did, you can see there it broke quite strongly to the downside, so that's where you would have paid attention. Had you not got out at that point there, you would have paid attention when it started breaking to the downside here, even though the price started rising. It gapped down there slightly, started rising, and then here it dropped pretty strongly. And you can see here again on the Fibonacci retrace, from that high to that low, significant. You can see there it broke below the 61%, and it bounced out of there eventually. So again, just be cautious of that. Always pay attention to the divergence. Now at the moment, as I said, the daily is neutral. The CCI on the hourly is bearish. So again, if that broke to the downside, then you can start taking short trades on the hourly. or you can interchange the hourly with a 2 hour, 4 hour, or whatever other intraday time frame you choose. Before we go, and then the next one we look at is another chart. This is the daily, looking at this indicator down here, and again, this indicator can be found in the description below for reference to that. And basically, what it shows is it combines multiple indicators: the MACD, the stochastic, the RSI, the CCI, and moving averages. And when it breaks above the +2, indicated by this dark blue line, then it's a potential reversal. And when it breaks below the -2, this red line, it's a potential reversal to the downside. Now, what I've done here is I've drawn these red and blue arrows indicating where it breaches below or above the +1 -2. I don't trade these each time they show a break. Like in this case, I wouldn't be trading each of these blue arrows to the upside. What I do is I look at potential divergence. So combining the divergence with the down arrows. So you can see there the CCI is showing a bearish divergence, and this is starting to then show a cluster of red arrows until you see there the price starts breaking to the downside. This also hit our 23.38% Fibonacci retrace, and that's where you potentially would have gone a short. Again, it's not a full scale reversal, but if you're trading this on the daily, that would have been an opportunity to either close out your long positions or take a short trade with some very tight stops. That's on the daily. You can look at that on the hourly. It works on all time frames. You can see there overall, it chooses most of the peaks and the bottoms. But again, if you drill down, you can see there's another bearish divergence here versus the price, and it broke down, and we've demonstrated that on the previous 1 hour chart. But at the moment, the last one we had here was a bullish arrow. Again, hasn't really shown much. There's no bullish divergence to accompany it. That also wasn't a bullish or bearish divergence, and so on. We'd like to see bearish or bullish divergence in conjunction with these arrows to be more confident. Let me just try and see. There was a bullish divergence here versus, you can see there, higher lows on the CCI versus lower lows on the price. Follow those blue arrows and you would have started taking long trades from there on. There's another bearish divergence there, a smaller one, versus that period, and then it again follow those arrows in conjunction with the divergence. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.